Hello, I'm David Cassidy with the weekly market summary for the week ending Friday the 28th of August. In what was arguably the quietest week this year in terms of economic data, the majority of markets closed the week in positive territory, largely looking through the plethora of noise despite pockets of volatility. At the beginning of the week, Donald Trump was reported to want to fast-track some coronavirus vaccines, potentially aiding in the slowing of the spread of the virus, which could end up being key if he is to have a successful election campaign. Hand in hand with this, midweek, we also saw the University of Cambridge announce autumn tests for a DNA-based multiple coronavirus vaccine following the securing of a 1.9 million in government funding. The progression of these tests is crucial for global well-being and economies, and is why there are over 170 vaccines undergoing clinical trials at the present time. This is a clear indication that we are getting closer to some form of resolution to the pandemic. The opening of the highly anticipated Jackson Hole Economic Symposium took place last Wednesday, the 26th of August, with it being a virtual format for the first time in history. US Federal Reserve Bank, the Fed, Chair Jerome Powell was a key speaker on the opening day, outlining the changes to the Fed's policy. Mr. Powell highlighted that they would take a looser approach to the US inflation target, allowing it to drift past the 2% goal after a period of stress in order to keep growth on track. In addition, the Fed took a more flexible stance on employment data, with Mr. Powell stating that it is no longer appropriate to maintain a fixed full employment target, thus allowing more breathing space in the labour market. We also saw the Bank of England, the BOE Governor Andrew Bailey, speak at the event on Friday. And Governor Bailey stated that despite the dramatic shock to the economy caused by the pandemic, the Bank of England is, quote, not out of firepower by any means, end quote, and that the bank needs to keep enough headroom to deal with any future shocks on the horizon. With Mr. Bailey giving little indication as to short-term policy moves, the UK market remained relatively unchanged by the statement. Inarguably one of the most significant news pieces of the week politically, Japanese Prime Minister Shinzo Abe resigned from his position on Friday, citing his ill health as the cause. Whilst there had been suggestions that Prime Minister Abe had been in ill health for many months prior due to his lack of public presence and appearances, the outlook for Japan has nevertheless become even more uncertain. With Prime Minister Abe being the architect of modern-day Japanese monetary policy, there is now a question mark over what his resignation means for the Japanese economy going forward. Outside of economic news, on last Thursday, the 27th of August, we saw Hurricane Laura make landfall in Louisiana in the US. While the exact cost of the damages has yet to be calculated, it was the worst storm to hit that state in its history, with winds in excess of 150 miles per hour. It is likely going to be a long road to recovery, with heavy damage to homes, businesses, agriculture and infrastructure. The latter saw vast damage caused to the region's power grid, meaning that parts of the state could be without power for large parts of September. With the US presidential election barreling down on us, President Trump's reaction to this tragedy could be key in a state that was easily won by Mr. Trump last time around. Despite the hurdles presented during the week, key data sets released were strong. Outside of European economic confidence data for August beating expectations, the fistful of remaining data released last week came from the US. We saw jobless claims for the week fall, GDP, gross domestic product, for quarter two revised upwards, and both new home sales and durable goods data smash expectations. And whilst we are not ignorant to the fact that there is an element of noise in many of the data sets released, all of those results suggest that key global economies are in better health than anticipated amidst the pandemic and indeed the noise we saw during the week. We now look towards this week's data releases that include US, UK, European and Chinese manufacturing PMIs in addition to Euro area inflation and the US jobs report for the month of August.